Time now to take a look at some of your money headlines. Puerto Rico is in default. This after the government announced yesterday it was only able to make a partial payment on its debts. This marks the biggest municipal default in U.S. history. A recent report shows that the Obama administration's mortgage relief program rejects, get this, 72% of its requests. The program was on an attempt by the administration to help homeowners hit hard by the 2008 financial crisis. Oil prices hit a 6-month low, diving 5% lower. This as concerns grow over excess global oil prices. U.S. crude has already fallen 21% since July. And consumer spending drops to its lowest pace in 4 months. The slowdown is marked by a decrease in demand for cars, suggesting to some the economy lost momentum in the second quarter. But don't worry, it could just be temporary. 5 weeks after a shutdown, Greek stocks continue to plummet. Greece's main stock index closed down just above 1% on Tuesday. Monday, it experienced a record fall of more than 16%. State pension funds are going broke. The money many depend on for retirement is currently far exceeding state revenues. The total state pension debt across the country now stands at around $900 billion.
Wow. Miranda's a killjoy with all that financial news.
Sorry.
For more money news, I'm joined now by Tom Hutchinson, Senior Financial Editor of the High Income Factor newsletter, available at moneynews.com. Tom, great to have you with us.
Well, great to be with you, John.
All right, let's talk about Puerto Rico a little bit. They defaulted for the first time in history. Some reports say that actually Puerto Rican municipal bonds show up in more than half of mutual funds here in this country. Is there going to be a significant impact on U.S. investors, and who stands to lose the most?
Well, I don't know how much. I mean, a lot of it has been discounted already. This wasn't from out of nowhere. This wasn't exactly unexpected. And a lot of those bonds are trading, have been trading like 70 cents on the dollar anyway.
Okay.
There will be some fallout into the bond funds, no question about it. But I don't think there'll be a lot of contagion in the sense of Greek contagion, like other weak states may start to feel the pressure and default as well. I don't see that happening.
All right, so we'll take a look at some other issues as well. We heard Miranda talking also about these pension obligations, $900 billion now across the country. We've seen places like Detroit and other cities in California going bankrupt. But this brings us back to Puerto Rico because they're kind of in a unique spot. Not an official U.S. state, so they're not eligible for U.S. bankruptcy protection. And since it's not a sovereign nation, it can't necessarily get money from the International Monetary Fund. So Puerto Rico's in a real tough bind here.
Yeah, and it's sort of the way out of the bind is that they're in is to grow your way out of it. And it's a lot more difficult for them to do that. And what you see is these countries, when they try to address the fact that they've taken on too much debt, go exactly 180 degrees the wrong way. They decide to raise taxes and kind of leave the benefits the same, but that's exactly work because, you know, you want less of something, tax it. You want more of something, subsidize it. So they tax the productivity, subsidize the unproductive elements, and they find themselves in a worse bind than they are already. In the U.S., there's more options because they have an option to potentially grow their way out of it.
Yeah, also unemployment much higher in Puerto Rico than it is here in the mainland United States. And with this financial trouble, more Puerto Ricans are moving to the United States. It's easier for them to do that than other folks. What is this going to do to the U.S. labor market here, specifically for unskilled workers?
Well, it's still more heading over. I don't think it'll be so many that it'll have an impact. They've been trickling through. I don't think the problem compares to the problem we've had at the border. So I don't see it as a problem for labor.
Okay, so not a big issue there. I do want to go back real quick and circle back on that unfunded pension obligation there we discussed earlier. What is the end game here? You know, it doesn't seem like there's any way to get through this without a lot of retirees taking a serious haircut.
Well, you know, that is certainly the trajectory it is heading towards. And if things continue to go as they're going, down the road, there's going to be a lot of pain, taking big haircuts. It'll be very controversial, the issues. But I think that it's still possible that if you can get good economic growth and increase the revenues to these states, and at the same time, over the long term, increase the return on the pension investments, it could be worked out. But if it goes much longer like this, I think we're getting to the point of no return.
All right. Well, we're going to have to do better than the growth we've seen recently after the Great Recession. Not enough growth here in this country.
That's the key.
Tom Hutchinson, thanks so much for being with us. It's always great to see you. Senior financial editor of the High Income Factor newsletter. You can get your copy of the High Income Factor newsletter by going to moneynews.com/HIF. Again, moneynews.com/HIF. Coming up, we'll bring you the top stories making headlines around the globe, plus a look at the intersection of comedy and the news, headlines and punchlines. Coming up right after this.